Hello, everyone. Good morning, good afternoon, and good evening to all of you, regardless of which part of the world you are tuning in from. My own name is Sheriff Daramola, and I'm so excited and delighted to welcome you to yet another promising session on the Extra and Speed Live. Well, before we kickstart the session, let's confirm that we are good to go this morning. So, if you can see my screen and you can hear my voice clearly without distortion, kindly type in hi in the comment section, as this will help me to confirm that we are all on the same page here. So, I would like to see some feedback, please. If you can see my screen, you can hear my voice clearly, let me know so that we can get this party started. All right, so I'm trying to load up my comment box. Okay, so let's see what we have here. All right, I see you, Skyborn. I see you, Wirep, Pragmatic, Burin. Okay, 502 439 402. Hi, 439. Okay, 039. Thank you very much. 9100. Helis Emperor. Okay, Amelero. How are you doing, Amelero? Trust you are doing well. Good morning, Carrie. Thank you very much for that confirmation. So I would like to take this as a confirmation that we are good to go this morning. So, we are going to be going through a very interesting session, as in preparation for the New York session today. I have conducted a comprehensive analysis on all of the financial instruments on our watch list, utilizing simple but powerful setups that will be our compass through the current market structure. And of course, we shall be harnessing the power of trend lines, key levels, and of course, chart patterns to gain valuable insight into the historical price movement of all the financial instruments. So, for this week so far, we have been monitoring four assets, and these are the US All Spot, the XAU USD, the US Tech 100, and of course the JPP USD. And we have been doing fair enough across this instrument, despite the choppy situations we were experiencing during the midweek, and things are actually going very fine at this particular point in time. So we are really going to be going into the details on this one. So stay tuned in so that you don't miss out on these insightful ideas that we are going to be sharing in the next 1 hour. Now, for those who are joining us for the first time, I'm always excited to have newcomers in the house. I trust you are doing very well out there, and welcome to our session. So, what we simply do here is to come together as a community, gathering in anticipation of the New York trading session. During this time, we normally review and manage our current position, while we also aim to position ourselves strategically for the day's trading session. So we do this on a daily basis, and I would implore that you stay tuned in and join our subsequent editions, as the more time you spend with us, the better you begin to understand how things works, and eventually be able to use the information you have gathered here to make your independent trading decision. So once again, I welcome you, and on that note, let's dive right into the business for today. And for those who have been with me for a while now, we all know how important checking the economic calendar is, as by now you know that these fundamental factors often manifest on the chart in technical patterns and price movement. And by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and, of course, specific technical patterns. And by using this information, it helps us in a better timing, in such a way that we can be on standby to catch any potential move prior, during, and even after the event. So with that being said, let's dive right into the economic calendar. And on the economic calendar, I wasn't able to find any high impact events that will be affecting the financial instruments on our watch list, sincerely. So what I did here, so that we can be able to have a better idea of what majority in the market will be looking forward to, I had to filter in medium impact event, and when I did, I was able to get a handful of events that we are going to be looking forward to today. And for today, in an hour 30 minutes from now, we are going to be seeing something from the Philadelphia Fed Manufacturing Survey for the month of July. So this is a spread index of manufacturing conditions within the Federal Reserve Bank of Philadelphia. This survey serves as an indicator of manufacturing sector's trend. So it's an event that majority will be looking forward to, and generally an above expectation reading is seen as positive for the US dollar. Now, if we look at the previous data here, we have a 237,000, and there is a general projection of, sorry, we have minus 13.7, and we have a general projection of minus 10. So this for me is a sign that there is a buoyancy in the manufacturing sector there. So we are going to be looking forward to what the actual data is going to be on that one. Then I skipped this one, the initial jobless claim, which will be coming up also in about an hour from now. And this is released by the US Department of Labor, and it measures the number of people filing first-time claims for state unemployment insurance. In other words, it provides a measure of strength in the labor market. A larger than expected number indicates weakness in this market. So if we look at what we have here, the previous data came in at 237,000, and we have a general consensus projecting 242,000, which for me, if you look at it, that's on the high side, which is not a good indication there. So we want to see what the actual data will be and how the market will be anticipating this event. Then we have the existing home sales data. That's one also coming in from the US economic docket. This provides an estimated value of housing market condition, of course, and a high reading is positive for the dollar, while a low reading is negative for the dollar. So we have a previous data of 0.2%, and there are no consensus on this one yet. So we are going to be looking forward to what the actual data is going to be on that one. Then from the UK economic docket, we have the GfK Group Consumer Confidence is a leading index that measures the level of consumer confidence in economic activity. So a high level of consumer confidence stimulates economic expansion. Of course, a high reading in this case will be a positive news for the pound sterling. And this is coming up later today, I think about 12 to 13 hours from now, that will be coming in. Then from the Japanese economic docket, we have the consumer price index, which of course we know this is an indicator that tells us the purchasing trends and of course the inflation index for the Japanese economy. Then we also have, lastly, we have the national CPI, a measure of price movement obtained by comparison of the retail prices of representative shopping baskets of goods and services. So on that one too, a high reading will definitely give us a positive expectation for the yen. So we are going to be looking forward to how the market is going to be anticipating this event. Of course, we shall be seeing it reflect on the chart as price action. So with that being said here, let's dive right into the business for today, and let's look at the market from a technical standpoint. So as usual, the first instrument on our watch list for today is of course the let's see, okay, the first one we are going to be taking is of course the US oil spot. Now on the US oil spot, it's quite interesting that though we have been profitable this week, let's run through what has been going on in this market since the beginning of the week. Now let's look at this closely. Let's take an holistic view first of all. So if we zoom out of this structure, the first thing we observed at the beginning of the week was the fact that price action has been bullish since the beginning of this month. And to emphasize this momentum, we were able to connect the series of higher lows here, which gave us this ascending trend line that you can see on your screen. And in fact, this trend line has been supporting the bullish momentum in the last couple of weeks now. Then in addition to this ascending trend line was another key feature in this market, which is that demand zone we noticed during last week's trading session, and this falls within that $75-ish area, as you can see here. And one thing we noticed last week is how since we saw the breakout of this demand zone at the beginning of the week, we saw that every time price comes into that area, every attempt by the sellers to break through has been met with strong resistance from the buyers. And if you fast forward to the last trading day of last week as well, we saw the same thing happen here, as sellers found it difficult to break through that demand zone. And in a matter of fact, I was thinking that price action will probably incite a bullish momentum above this level at the beginning of the week, but we were wrong, as the market in its own ways opened with a bearish gap, as you can see here, leading into a situation where price action broke down both the ascending trend line and of course the demand zone to incite the idea of selling. Though we were able to take advantage of some selling positions, remember, after we saw the breakdown retest of that demand zone around the $74.50 level, and in fact price action moved about 80 pips in our favor before this bullish traction began. We had a couple of more sell positions there which all closed at a worst case scenario break even, as we moved our stop losses accordingly when price moved in our favor. Now we noticed something here on Tuesday which began to change our bias from bearish to bullish, and one of the structure here is that $73.75 area. We saw how this area has been a strong buying niche since the beginning of this week. Now look at what we have here. You saw how sellers struggled to break through that area. In fact, on that same Monday during the New York session, we saw how sellers couldn't have that momentum to bring price even close to that zone. Then on Tuesday's morning session, we saw this sharp rejection of this area. And at that point, we begin to realize that this might likely be a platform for another bullish momentum for this week. And as a result of that observation, we positioned ourselves just right above the $74.45 level to capture a bullish move to the upside. And since that moment, we have been buying the US all spot, as you can see here. Then we also had the privilege of capitalizing on this and maximizing the potential by adding more positions, had the breakout of the $75 level, and of course the key level for the week at the $75.25 area. Then remember, yesterday as well, we also decided to capitalize on the breakout of the structure. As you can see, price moved significantly well. So on the US all spot so far this week, we have been profitable, scooping close to about 300 pips on the multiple entries we had here. And unfortunately for buyers, we can see selling momentum came in to take us out of all our positions at a reasonable amount of profit. So congrats to everyone who has been part of this profitable journey. So with that being said here, what is going to be our plans as we get prepared for the New York session today? Well, while I was trying to decipher what could really go on today in this market, I was able to identify a simple setup. And one of the things I took note of here is the fact that price action still remains above our key level at the $75.25 area. Now remember how we use our key level in this community. As long as price remains above the key level, of course we want to be looking out for patterns and structures that will support the idea of buying that asset. Now, in this case scenario, we saw what happened at the beginning of the week when price action broke out of that key level here. And since then, price action has been trading above that structure. And look at what we have here. You know, from a technical standpoint, whenever we have a breakout of a key structure such as one we have here, we expect that at one point in time price is likely going to come back to retest the structure that was broken, with the anticipation of inciting the second wave of that bullish momentum that broke out of that level. And interestingly, if you look at what has been going on in this market since the later part of the New York session, you would notice that as soon as price action came to retest that area, we have seen how buying pressure have been present around that level. Sellers have found it difficult to break through, giving us a clue that buyers are present around this area to probably incite the second wave of that bullish move. And if we take into consideration the impulsive move that brought us to this point, it is very possible that this old pattern we notice here could turn out to be a reversal pattern that will incite a trend continuation to the upside. Now look at what we have here. Since price action tested the $75 level, we saw a sharp rejection, giving us clues into strong buying potential around this area. And since then, price action is yet to break the previous low, which is another beautiful sign that price action is likely going to be going to the upside. Now, with this information in hand, how do we intend to capitalize on this move? Now, we begin to see something that looks like a reversal pattern, of course. And what we are going to be doing, hold on. All right, sorry for the break in transmission. So, like I was saying earlier, we begin to see something that looks like a reversal pattern. And you know how we do it in this community. Whenever we begin to see such patterns trying to evolve in the market, the next thing we want to be doing is to identify a neckline, which of course we are going to be using to guide our trading activity. Now with this structure here, we have a neckline along the 75 $1.50 level, which of course had been a major determinant of price action since the beginning of the week, as you can see here. And what we are going to be looking forward to at this point is a breakout retest of this level to incite a trend continuation to the upside. And look at what we have here. Price already has broken out of this level at this point. So if you're already profitable on this one, you want to be having a buy stop order above the $75.50 level, while you have a stop loss sitting anywhere just right below the key level, which will be dovetailing to about 30-35 pips stop loss on that one. And let's see how price action will be going forward. So price still remains above our key level. So at this point, we want to continue to look out for buying opportunity. Then if price action continues to climb and find new highs, then we are also going to be looking forward to a breakout of the $76.50 level to maximize the potential of this bullish move. Then we also remember we also have an highest point here at the let me replicate this one into the structure. So we have something at the $76.80 level, of course. So let's mark this level out on our chart, some $6.80 level, as you can see. So we are going to be looking forward to more opportunities to maximize this bullish move if price action goes on to break out, retest that level too as well. So things are looking very bullish in this particular market. Then to further emphasize this potential bullish momentum is this ascending trend, and I was able to identify this morning after connecting the series of higher lows. As you can see here, we've been seeing higher lows here, and price has been respecting these higher lows, giving us a clue that price action is still on a very strong ascending trend line. So this ascending trend line we have here is going to be our guide for today's trading session. So as long as price remain above this ascending trend line, we shall feel comfortable to get we shall feel comfortable in our buy position. Now, in as much as we are looking out for buying opportunities in this particular market, we are going to also consider the potentials the sellers have too as well. And with the situation we have here, with the ascending trend line we have, for us to start considering selling the US oil spot, we want to see price action slice through that ascending trend line. So if price action breaks through the ascending trend line, and of course if it breaks through, it would have also broken down the support line, that key level we identified earlier at the beginning of the week. So a breakdown of this both structures will give us a signal that we are going to be getting ready to sell. Now, if we are going to be selling here, remember that we are not going to be getting too excited, as we are going to remain patient to wait for a significant confirmation that sellers are actually going to be dictating the pace going forward. And for us to be able to see this, we will scale down into our lower time frame, where we want to be looking out for patterns that will reveal that buyers are finding it difficult to climb back above the ascending trend line. So what we are going to be looking out for is a retest of structure on the lower time frame, continuous selling pressure below the structure, then we can join the bearish move to the downside. So this is how we are going to be selling if price does not break down the $75.25 level, and of course the key level we shall not be considering selling the US oil spot at all. So these are my views here on the US oil spot. If you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to read through the comment section and see if there are any questions for me before we move on to the next instrument. And you can as well take that time to mark out these levels on your chart, as you will be needing them to guide your trading activity for today. Hello, I saw a couple of comments here. Hello, Jack Racentis. Thank you very much. Cast, good morning to you. Nikki7, good morning. 964 276 799. Good morning to every one of you. Ali Kashan, good morning. Ali Kashan says that the voice is distorted due to internet issues. Well, I'm not sure that is, because from my monitoring device here, it sounds okay, and I've not seen anyone commented that things are not fine. So what I would suggest here is that you probably want to switch off your app, probably restart your phone all over, so that you can check if that probably it's from your own end. Please check that and let me know afterward if it still remains the same. Okay, Ali Kashan. 8603, good morning to you. Thank you very much for checking in on us. So on this note, we shall be moving right in the absence of no questions. So we shall just we'll assume that we're on the same page. So we shall be moving right into the next instrument on our watch list for today. The next instrument on our watch list is the US Tech 100. So on the US Tech 100, another interesting situation we have here, which led to another profitable journey as we had here, as we projected here yesterday. So let's quickly run through how the week started for us on the US Tech 100. Now, at the beginning of the week, we initially identified a reversal pattern, which we were thinking that price would respect it. We saw something like a head and shoulder pattern. Let me give you a visual representation of what we saw here, where this is the head, and we saw a transition of the left shoulder, of the right shoulder, which never matured, as we were looking forward to price action breaking down this level, which of course never happened, hereby negating the idea of a reversal pattern there. Then in addition to that one, we saw this range where price action was caught within. That was confined between the 15,600 and of course the 15,530, giving us a clue into the level of indecision at that point in time. And with the situation we had here, you know how we use our flat channels whenever price action falls into such range. We want to wait patiently for structures to mature, for signals to mature, in the form of either the breakdown of the support line to give us an opportunity to sell, or the breakout of the resistance line to give us an opportunity to buy. And in fact, that was exactly what happened. So with our buy stop order above the 15,600, we saw how price action broke out the resistance line to inside our first buy position for the week. And since then, price action has been climbing and finding new highs at this point in time. Then we also added another position here after price broke out of the 15,725. And during our live session yesterday, we saw this beautiful range identified here. And with this situation, with this range here, we all acknowledge the level of indecision at that particular point in time. And one thing we said here is that we are going to be looking forward to either a breakout of the range to the upside to capture a bullish momentum, or the breakdown of the range to the downside to capture a bearish move. Though we had a breakout of that structure happen, we saw the breakout of the resistance level happen, where price moved about how many pips? About 50 pips thereabouts before the bearish momentum began. Though if you are taking advantage of that move and price moved significantly well, you must have moved your stop loss to break even, securing the position so that you don't get caught up in any sudden pullback that will take your position out in a loss. So if you had done that correctly, you would have been taken out at break even on that one, as we saw price action drop down to break down and in fact retested the support line at the 15,815 to inside a bearish move to the downside. And for those who took advantage of this opportunity, well done to you for being on standby to catch this move, as you will currently be running with about 90 pips in profit. That is if you still have a sell position running at this point. So for those who took advantage of this opportunity, well done to you for being on standby to have caught this move. Now, with this information we have here on this chart, that is the sell bias we're already witnessing, what is our next line of action on this one? Well, before we can start considering our next line of action, this position we are currently in, that is for those who still have a sell position running, must definitely be secured. And to secure this position, I will be suggesting that we move all stop losses to anywhere around that 15,757 area to secure position. Of course, we want to give room for price action to breathe. So at this point, with a well secured position, what is going to be our plans as we get prepared for the new week? Well, before we go into the details of what to look out for today, I want us to scale up into the higher time frame. Let's look at things from an holistic point of view to decipher what our next line of action will be. So scaling up into the 4 hours time frame, this is what you will see here on the 4 hours time frame. And remember that at the beginning of the week, we identified something that's looking like an ascending channel after connecting the series of higher highs and higher lows here, giving us this beautiful structure. Then in addition to that one, we have an ascending trend line just right within that ascending channel, as you can see, which of course has been supporting this bullish momentum since the beginning of this week. Now price action is right along the ascending trend line right now, so let me zoom right in so that we can see things clearly. So remember that on the 4 hours time frame here, we acknowledge a key level at the 15,725, a level which has been a major determinant of price action since last week Friday. As you will see, we had selling pressure here on Friday. We also had here on Monday at the beginning of this week before we finally saw the breakout of the structure on that same Tuesday. And you saw what happened. Price broke out of that level for the first time in the last couple of weeks. And from a technical standpoint, when price action breaks out of a structure like this, we expect that it will come back into that structure to retest it in anticipation of another wave of bullish momentum. Now, with the situation we have here, price action is back into that 15,725, a level which has been a major determinant of price action in the past, giving us an idea into how important this particular confluence is. Then in addition to that one, that confluence also shares a coincidence with this ascending trend line. So now the question going into the New York session today is that will price action respect the ascending trend line one more time to incite another wave to the upside, or are we going to be seeing a situation where price will break down the ascending trend line and of course the 15,725 level to incite a sell-off, probably into the support line of the ascending channel, or even break down that channel? So this is what we are going to be looking at for today. So our center of focus for today is basically going to be around that 15,725, where depending on how market participant reacts to this level, depending on the patterns or structures the price action evolves into, will give us an insight of where price action is likely going to be going. So in order to understand what is really going on around the 15,725, we are going to be scaling back down into the 1 hour time frame, where we shall be seeing things more clearly. So now if we scale back down into the 1 hour time frame, this is what we have here. So in fact, I need a trend line to guide our trading activity for today. So if we do things correctly here, we should be having a couple of trend lines. So we have the first one here, and then I'm going to be having the second one around here. So we should be having a couple of trend lines to guide our trading activity for today. So when we bring back our candle chart, we should be able to do some adjustments to capture the pivot highs here. So right now we have a couple of trend lines to guide our trading activity for today. Then in addition to that one, we have a range where price action has been caught within since the early hours of today. And so we have the resistance level somewhere around here. So I would like to give this a blue color, $15,775, 775 level. So I'll give this a blue color to differentiate it from the previous levels we identified earlier, as this is what we are going to be using to guide our trading activity today. So then this is the lowest point of that range, which is around the 15,000, should we call it 700 zone? I think I'll be using the 15,700 zone instead. So we use the 15,700 zone because of the cycle, the round figure of that price. So we have it right below this level. So right now, since the early hours of today, it is quite clear that there is a level of indecision in this market, which is probably as a result of participants waiting for a catalyst that would drive price movement, which could of course come in the form of an economic event. And remember, we talked about a series of economic events we are looking forward to today from the US economic docket. So right now, for us to be buying the US Tech 100, we want to see price action take out the 15,775. So I want to see price action break out, retest, then buying pressure, then we can join the trend continuation to the upside. So anywhere above the 15,775, we will start considering buying. So we look out for patterns and structures that will support the idea of an uptrend continuation. Now, for selling opportunities here, I want to see a breakdown of the 15,700 to confirm that sellers are going to be dictating the pace here. So for those who still have a sell position running, I told you all, you want to be moving your stop losses to secure the current sell position while we wait and see if price will go on to break down the 15,700 to welcome more selling opportunities in this market. And one thing about the sell position here is that don't forget that we have an ascending trend line here, which could serve as a platform to incite another wave of bullish momentum, or it could even be broken to the downside to welcome more selling opportunities. So as soon as price gets into that zone, we definitely want to be moving all stop losses to secure our current position while we wait and see how the market will be reacting to that zone. So these are my views here on the US Tech 100 for today. So you want to be marking out these levels on your chart, as you will be needing them to as a reference point to guide your trading activities for today. So if you have any questions, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds off, and you can use that time to mark out these levels on your chart too. I see your comments, Valeric, CMB. Good morning to you all. Thank you for checking in. 801. Thank you. 1134. Thank you. All right. So in the absence of no questions, I want to assume that we are all on the same page. So we shall be moving right into the next instrument on our watch list for today. So the next instrument on our watch list for today is the GBP USD. Well, so far so good this week. The GBP USD has been one of our most profitable trade this week, as we have been selling this instrument since the beginning of the week. So before we go into the details of what our expectations is going to be looking like for today, I want us to run through how the week started for us and what incited the idea of initiating a sell position in this particular market. So at the beginning of the week, let me zoom right in so that we can see things clearly. So at the beginning of the week, remember that we had our key level duly identified at the 1.3100 level. This was identified on our 4 hours time frame. And in this community, by now you know that when we have our key levels spotted, if price action continues to trade below the key level, we definitely want to be looking out for patterns and structures that will support the idea of selling that asset. Now, if you look at what is on this chart on the GBP USD, you will see that the most part of this week has been spent below that key level, which further emphasizes the strength of the sellers in this particular market. And coupled with the negative data coming in from the UK economic events, we realized that the buyers could no longer hold on to that momentum, hereby letting go, allowing the sellers to take over the market. Now, in addition to that key level here, we had a couple of more parameters, and one of them is the descending trend line, which we connected a series of lower highs since last week Friday to give us a beautiful trend line to work with at the beginning of the week. And one thing we agreed here on Monday was that as long as price remains below the ascending trend line, we shall be looking out for selling opportunities. But if price breaks out, then we definitely want to be looking out for opportunities to buy. Now, finally we observed a range where price action was confined between the 1.3100 and of course the 1.383082. And one thing we saw here, we saw the initial breakout of the structure actually, which I told you triggered my buy position, which of course went into a loss on that one. So it was an unfortunate start for me on the JP USD before price action went to break down the support line to trigger a sell position, which moved about I think 30 pips thereabouts before this bullish traction began. And immediately we spotted this bullish traction here on Monday. We decided that probably this could be a sign that a bullish momentum will begin. And so right there we spotted this ascending trend line on Tuesday, which we said we are going to be using to guide our trading activity. That is, if price remains above the trend line, we feel comfortable in the buy position. And look at what we have here. Price action went on to break out of the descending trend line, retest of structure to incite a bullish momentum. So we took advantage of a buy here, which never lasted long before sellers come in to break down the ascending trend line to give us an opportunity to sell the GBP USD at this point. So we had a couple of positions. I think we had another position here. I don't know what happened. I think this was just mistakenly deleted. I don't know how that happened. So we had hold on a second, let me see if I can still okay, it was around this level here that we added another position to sell the GBP USD, and since then we have rode that move all the way to the downside. And as we can see here again, this morning, yesterday morning, we talked about this current position here where we said we are going to be looking out for selling opportunities if price action remains below the 1.293, and currently we are in a sell position which is running with about how many pips in profit at this point? That's about 36 pips in profit. And for those who are in this sell position, you definitely want to be moving your stop losses to break even at this point. So right now, with a well secured position, how do we intend to manage our positions ahead of the New York session today? Well, things are still looking very bearish, and to guide our trading activity for today, I was able to spot a descending trend line, which I think we can use to guide our movements today. Now, if you look at this, I connected a series of lower highs since the beginning of the week. Of course, price action has been bearish, so we have a beautiful descending trend line, which I was able to spot here. And what this simply means is that as long as price remains below this descending trend line, we shall feel comfortable in a sell position, while we also look out for more opportunities to sell. But if this trend line is breached to the upside, then we could probably be getting ready for another wave of bullish momentum. So for today now, we have a range where price action has been caught within since the early hours of yesterday, and that is the 1.296 and of course the 1.28850 level. So let's see how the market will be reacting to this level. Excuse me. So the lowest point for this week is around the 1.2885. So let's see if the market will break down that structure. And in fact, if the market does not break down this level, then we might probably be seeing a reversal pattern gradually unfold in the form of what will look like a double bottom structure. Excuse me, please. So if price action finds it difficult to break down the previous low, then we should be getting ready for a reversal pattern, as this might likely incite a bullish move. And if this reversal pattern forms, then The neckline situated at the 1.29600 area will be what we are looking forward to a breakout of to join a bullish momentum to the upside. So let's see if this bearish momentum will break down this 1.285, and if it does break down, then the potential of a reversal pattern will be negated, and the idea of a trend continuation to the downside will be what we'll be looking for to maximize the potential of this bearish move. So at this point in time, things are still looking very bearish, so let's look out for more opportunities to sell this one. Have the breakdown retest of the 1.2885, and remember that as long as price remains below this bearish trend line, we shall feel comfortable in our sell position. And the only condition that will make us want to buy is for us to see price action breach the trend line, and then we begin to see buying pressure above the trend line for us to join a move to the upside. That is the only condition here that will make us want to be buying the GBP USD for today. So right now it's looking bearish. We continue to look out for more selling opportunities in this particular market. So I will be taking the next 10 to 15 seconds to hold and see if there are any questions regarding what we just discussed now. If there are any questions, feel free to let me know in the comment section. All right, so in the absence of no questions, I want to assume that we are all on the same page here. So we shall be moving right into the next instrument. Of course, this is going to be the last instrument for today. So the last instrument on our watch list for today is my favorite, the XAU USD. And on the XAU USD, we've actually been buying this commodity since the beginning of this week, remember? So we have been buying, making profit as price action continues to find higher highs in this market. And during our live session yesterday, this was where we were before we closed the live session yesterday. So we were in a buy position, which I told us to move our stop losses to secure the position, and prior to the New York session we were taking out of that position. And one thing we said here yesterday is that we shall be looking out for selling opportunities if price action break down the 1,975, which it actually did. And in fact, I was taking out in a stop loss on that one. If you are taking advantage of that opportunity, you must have been taking out in a stop loss on that one. As we saw, buying pressure resumed around this area, negating all potentials from the sellers to push price to the upside. And since then, price action has continued to climb, finding higher highs and higher lows in this particular market. And if you remember, during our live session yesterday, we also acknowledged the 1,979 level, where we said we were going to be looking out for buying opportunities above that structure if price action breaks out of it. And that was exactly what happened. And if you had your buy stop ordered there, you must have taken advantage of that opportunity. And if you had moved your stop loss accordingly, you must have been taken out of that position. So right now that we are going into the New York sessions today, what is going to be our plan? What are our expectation on this current market structure? Well, the first thing I was able to observe this morning while trying to dissect what our next line of action will be is to I first of all acknowledge the fact that price action has been bullish in the last 24 hours, and to acknowledge that we connected a series of higher lows here, which gave us a beautiful ascending trend line, which of course we are going to be using to guide our trading activity for today. Now, if you look at this, price has been respecting it, and currently price is just right above that trend line. though we have been seeing some selling pressure in the last 4 to 5 hours now, but as long as price still remains above that ascending trend line, and the potentials of the buyers cannot be neglected at this point. Now, the only thing that will make me want to sell is for price action to break down that ascending trend line. Now, let us look at what happened here yesterday when price action tested a new high at the $1,987 area. Now, we saw that when price got into that structure, we have been seeing some lower highs in this particular market since this morning. Price is yet to break the previous high, and following this we've seen a lower high which is characterized by a lot of sharp rejection of that area. So if you look at the nature of the wick of this candle, you will see that sellers are actually present around this area. So with this situation here, we shall not ignore the potentials of sellers. So a breakdown of the 1979 will be what we're going to be looking out for to join a trend continuation to the downside. And one thing about this structure here is that if price action ever breaks down the trend line, it will also break down that key level at the 1979 to incite a bearish signal. And remember, we are not going to be getting too excited. Of course, we want to wait for confirmations to happen here. So what we are going to be doing is to wait for price to come back, retest the 1979 or the trend line, where we shall be looking out for continued selling pressure on our lower time frame to be part of this bearish move to the downside. So that is how we are going to be selling the XAU today. It's very, very simple. All we just want to see is for price action to break down both the 1979 level and of course the ascending trend line before we can start considering selling. So if this breakdown does not happen, we are not selling the XAU. So please, let's take this into consideration. Mark these levels out on our charts. Now, if price action does not drop to the downside and instead continues to find higher highs, then the bullish momentum will still remain valid. So we shall be looking out for opportunities at the breakout retest of the 1984, while we're also going to be looking out for more opportunities to maximize the potential of this bullish move if price action goes on to break out of the $1,987.50 area. So it's a very simple setup we have here. Our center of focus for today is simply between the $1,987.50 level and of course the 1979, where you definitely want to be marking out this level as you will be needing them as a guide to your trading activities for today. So let's mark these levels out and let me do a quick recap here. We are not going to be selling the XAU unless price action breaches the ascending trend line and of course the 1979, where retest of structure on our lower time frame will confirm that we are good to sell. And we are not going to be buying unless price action breaks out, retest the 1984 to join a bullish move. Then we can have a buy stop order above the $1987.50 level to capitalize on the uptrend continuation. Excuse me. So this is what we are going to be looking at for today on the XAU. So these are my views here on the XAU. So if you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions before I call it a day here. So let's see what we have, and you can as well use that time to mark out these levels on your charts, as you will be needing them as a reference point to guide your trading activities for today. All right, so in the absence of no questions, I want to assume that we are all on the same page here, and I am very confident and positive that we are ready and equipped to take advantage of any potential trading opportunities lining up for us today during the New York session. I just hope that we remain patient in the market, wait for our structures to mature before we jump into any positions, as we've already identified the kind of setups we want to be looking out for before we open any position in this market. And for those who are joining us for the first time, I hope you are able to gain one or two things from what we discussed here. Trust me, the more time you spend with us, the more you get to understand how this works and eventually be able to use this information to guide your trading activity. So, on this note, I wish you all best of luck and I look forward to seeing you again tomorrow, 10 a.m. UTC, 11 a.m. West African time, so that we can come here again to review how well these assets we've been monitoring so far this week has been doing, and of course, get ready for the last trading day of the week. Once again, I wish you best of luck and do have a wonderful evening, everyone. Bye bye.